Good morning to you, Chandra.
Good
Very
morning.
happy new year. May 2015 be the year of better forecasts for TCS. You've had an interesting quarter, and I say interesting because some part of it was predictable. You always call it a seasonally slow quarter. But you know, it's come on the back of a disappointing Q2, if I can be honest, and therefore it's left me a little bit confused about what FY15 is going to pan out like. So I'm going to leave it up to you to characterize how this year is going to sort of evolve, given this last quarter that we are in right now. What are we going to end FY15 with? Definitely not growth that will beat FY14. That I know is clear at this point in time. Fair?
Fair, very fair. Happy New Year to you, Menaka.
Thank you.
I think from a Q3 perspective, it's usually a weak quarter, as you said, and I think we have delivered good set of numbers, given that we faced headwinds in terms of the working days as well as in terms of furloughs. But the biggest takeaway for me is that as we exit this quarter,
Right.
we have seen a good momentum. I think the retail, financial services industry, life sciences, manufacturing, high tech, as I highlighted in the call last night,
Yes.
all of these things are showing a very good momentum. We at this point in time see a couple of headwinds. One is the diligent of business because the books are running off. So we will have a revenue headwind in that business. The second one is the energy business.
Right.
Because of the oil where it is today, it has actually gotten worse than when we started this quarter in
Fair
Q3.
enough.
So I think these are the two headwinds. But apart from that, I think we're pretty positive, and I can't give you a definite number for.
No, I'm not asking for a number. I'll tell you why I'm confused. So when we started the fiscal, you said this fiscal would be better than FY14, and
Yes, I
that's
did.
what the outlook may have been, so I'm not holding it against you. In quarter two, you admitted that you all had sort of dropped the ball somewhere, and I'll get to why, but you had admitted that you had dropped the ball somewhere, and growth, you know, sort of revenue missed you by about $25 million. In quarter three, while the numbers are not encouraging at all, your outlook seems to be very upbeat. So is it that quarter one and quarter two didn't seem as certain with clients as you had anticipated, but that certainty has now been restored in quarter three?
I think I would like to slightly differ
Please do,
with you,
yes.
because quarter three the numbers are fine, just fine. See, if you look at Q3 this year versus the Q3 last year, we have done very well this year. Actually, if we had
volume growth is so low.
No, you
40
should always
basis
look
points.
You should look at the constant
in
currency.
Q3 last
You
year,
should-
you did 1.8% in volume growth.
should
Your
look at
peers
the-
have done 4% and more.
You should look at the volume and pricing together, because the contracts are all not time and material. There are fixed price contracts, monthly billing contracts, and time and material contracts. So we have always said that you should look at volume and pricing together, and especially in quarters where you have a lesser number of working days, etc., we always have a better pricing. So if you look at,
if I may just briefly interrupt you.
if you will allow me,
Yes.
if you had seen us deliver that extra 40 basis points, 30, 40, 50 basis points in Q2, then the momentum, the same result this quarter would have taken us exceptionally
So
forward.
I get that Q2 is what failed you to some extent, or you failed Q2, however you
Whatever
want to put
it is, whatever it is,
But
yeah.
you know, and this quarter is, look, when we started this quarter, we knew it was going to be seasonally weak. You did a mid-quarter review that talked down expectations. Your numbers have yet disappointed to some extent. Even the muted expectations have not necessarily been met. Dollar revenue is flat. If you take out equipment sales, you might in fact have had a contraction in dollar revenue and no growth whatsoever. Volume growth is not according to peer group numbers. So I'm just curious as to, yes, I know it's a seasonally
that's
quarter.
not a correct way to look at it. I think if you really look at the pricing and volume together, at 2.5 constant currency growth this quarter is a very good sort of number, and it is in line. It's actually meeting our expectation.
Okay.
The thing that we missed this year is Q2. If you had done that extra 40-50 bps growth in Q2, this would have been just fine to meet whatever we wanted to meet in FY15.
Okay. Before I go back to Q2, I want to come back to this sort of qualitative outlook, for the rest of FY15 and, of course, more importantly, FY16. whatever didn't work out in Q2, is it now coming back in terms of action? Because you sound a lot more positive, you know, in your press conference yesterday, in the analyst call, than you did when we were speaking in Q2.
I think it's not that something didn't work out in Q2. I think if you really see the qualitative metrics for Q2, again, we grew in all markets, all industries, etc. But we did not meet the revenue expectations that even we ourselves had set for ourselves.
And there were three reasons you put down for that: retail, Diligenta, and LATAM. Right?
Yeah,
Those were the three reasons I remember from the last quarter.
Correct.
Right?
And then now, if you look at that, retail is come back.
Not fully. It's flat.
No, not in this quarter.
Yeah.
Q3, we expected it to be slow in Q3 because there is season and holiday season, no discretionary.
But Q4 will be better.
I think it will be better from here.
So retail will, that problem will have been resolved. So
yes, will have been resolved.
Okay.
And the LATAM also, the problem, I think
the numbers show that in this quarter.
This quarter, and I think from here we will grow.
So Diligenta is the only sticky spot. You said in your analyst call that it might take a couple of more quarters to resolve that?
It may take even longer. See, I think from a Diligenta point of view, I also want to make sure that everyone understands. Diligenta is a different type of business. It's a good business, but it's a business which has one very large deal for a longish period of time, then the next large deal. So it's not a business where you get small incremental revenues every quarter. So whenever that large deal comes, then we get a very strong uptake in revenue. If that is not there, then it's kind of the policies run off, then the revenue keeps going down. So to that extent, Diligenta business, though it's a good business from a financial point of view, but from a quarterly growth point of view, it's a business which has quite a headwind for us. In the next
when will you be able to resolve that, or when do you think it will stabilize? 2 or 3 quarters from now?
Can't say. When I have a deal,
in the analyst call you indicated that a couple of more quarters of weakness.
No. I said you should at least expect the next few more quarters of weakness. I did not say.
At least few more quarters. Okay, that's fair enough. Maybe I heard it slightly incorrectly, given that I was hearing.
The way you are picking every word, it's very hard for me to use any word.
I want to ask you about the FY16 outlook, not in numbers, I know, because you don't offer guidance. But before I do that, a couple of other areas in this quarter's earnings. India growth potential. I thought you were expecting India to do better and better every quarter. It sort of flattened out this quarter. I'm just sort of curious as to what the outlook on India is. So it's a small part of your business. Consulting has done very well for you, but ADM has not. Explain to me why that shift has taken place. I
think from the India perspective, India has done well. See, when I say India will do better and better, it doesn't mean that it will grow 10% every quarter or anything. Constant currency basis, this has grown 3% plus this quarter. And when you convert it into dollar terms, obviously you're going to have a problem. But I think constant currency basis, India has grown 3%, which is not bad at all. All I expect India to do is to continuously grow, and we think that we will do that. So we are quite seeing the momentum. So we should see that. In terms of the service line, the reason ADM is flattish is also due to the number of working days and the furloughs, because most of the business that gets affected there is an ADM business.
So I was quite cheered by the growth in your consulting business, but you're saying I'm reading too much into it at this point?
I think consulting business,
because that is a higher margin business for you.
It's a higher pricing business, not necessarily a higher margin business.
Okay, higher pricing.
Higher pricing, higher cost.
Yeah. Okay,
so margin-wise, I don't think it's a very high margin.
Enough.
But that's an indication of the discretionary execution business to come. When you get a high consulting business up front, then you know that there is going to be a follow-on work that you're going to pick up.
Okay, so now talk to me about 2016, right? This is the year when clients start planning their budgets, their spends. If you're telling me in your previous answer that consulting is an indication of improvement in discretionary spend, are you saying FY16 is going to be better than FY15?
This is Menaka's statement, not my statement.
I'm asking, it's not a statement.
As I said, I'm not going to make one-liners.
You regret having said this, is it?
Yes,
at the beginning of FY2? Yes, I heard the press conference.
Absolutely.
And you sounded very regretful of having at all described FY15
because what happens is that people are looking for a particular number. When you make a statement, they kind of catch on to that. So qualitatively, I would say that the deal pipeline is very strong. Apart from the two things I highlighted, everywhere else the momentum is good. Our recruitment is strong. Our pipeline that we have is strong, and we are executing very well. All the discussions we have had with clients clearly indicate that there is a good momentum. I always go by the feedback that we get on the ground. So I think we should do well in FY16.
No, but you've got to give me some context as to what well means. You're this big ship, you know, that has been moving at this incredible speed for the past many years. At some point, we've discussed this ad nauseum. Size will catch up with you. What do you mean by FY16 we will do well? I mean, I have no clue what well means in your dictionary. So please give me some more color to that.
I can't. Unfortunately, I can't.
No, I'll tell you why. No, please. Because,
we should be growing. See, we will be
in your press conference, you said we are poised for another exceptional year next year.
Yeah.
You've used some big words, right? You've said client additions are spectacular.
Yes,
Deal pipeline very strong. Customers are spending lots of money. TCS is poised for industry-leading growth.
I have not used...
so when you say spectacular, what do you mean?
I have not said customers are spending
lots of money. You said
these are your words.
You tell me we will do well. In the press conference, you say next year will be spectacular. Well and spectacular are two different words. So please tell me what FY16 will be.
We have said that FY16 will be a very, very good year for us. You can call it
so now we've got from well to very, very good.
You can call it well, exceptional.
I think you called it spectacular.
See, all I am saying is that our North America market looks good. Europe looks good. UK barring Diligenta looks good. Latin America looks good. India looks good. BFS looks good. We have headwinds in insurance because of Diligenta. Retail looks good, and I've spelled out all the
at the beginning of FY15,
what
you told me
mean? What does
the
it
last
mean?
quarter of FY14 and the beginning of FY15, this is how you described FY15. That's why I'm asking
still
you.
Still FY15 is a great year. We are going to deliver industry-leading growth.
Okay.
So you can always argue 0.5% less, 0.5% more, but still FY15 we are delivering industry-leading growth.
So FY16 will be driven by, you said three things: digital, simplification and governance, right?
Absolutely.
Are we expecting a shift in this business now towards a higher margin sort of business mix, in the years to come starting FY16?
Well, I think from a margin perspective, we have clearly said that we will operate in the 26 to 28.
I get that, but is your business mix now moving towards that? As more digital contracts come your way, as digital gets embedded in your way of life?
I think any new technological shift will initially result in a higher pricing, but not necessarily higher margin, because you will also make a lot of investment. Okay. So we will pick up significant amount of digital business, because we have clearly stated, and I've used the quote, the default is digital. Anything and everything we do will be digital.
Yeah, you didn't offer too much color in your analyst call last night in terms of the size of the digital deals that you're winning or the kind of margins in them. So I'm not going to persist in that question. I won't get an answer.
Yes.
But you've got to give me some more sense of how much bigger digital is in your portfolio today.
See, I think it is, as I said, the default is digital. Everything we are going to do over the next 2-3 years is going to move towards digital. So even customers in the current environment, whatever areas they are working on, all that will shift to digital. But it won't be a overnight thing. Today was this technology, tomorrow morning is digital. But you should think about how the mainframe technology moved to internet technology.
Okay.
So like that, the digital has so much new opportunities because it's just not a technological shift.
Okay.
It's a new business model.
Okay. Some of your peers were indicating that, in some geographies, for instance, in the US, spends might be flat. What is your outlook on how much spends are going to improve by for FY16 or even the calendar year of 2015?
I have always gone by the clients. Okay.
Yeah.
So I don't want to take a call on a particular geography or a particular industry. I think our sense is that some of our clients are going to increase the spending because they are going to go aggressive on adoption of the future. and some of our customers are going to be flattish and trying to get cost out from.
Are any clients looking like they may contract spending? Because there was some question mark. We had some brokerages put out reports a few months ago on, discretionary spends coming down by big banks in the US or changing their profile. Are you looking at any discretionary spends or spends coming down?
It will be a mixed bag. For example, I expect energy sector, clients in the energy sector to contract. But by and large, our take is that with some clients it's going to be flattish, with some other clients it's going to be increasing.
Will more clients increase than those who are flat? Look at the detail I have to go to try and get some more detail from you.
You are asking for more details than I have.
Well, you must have some outlook on what
we have, but I can never tell you that if you're operating with 1,000 clients, is it 499 and 501 or 550 and 450? I can't say that. But all I would say is that there is a great urgency to adopt the future because of the potential it holds for the clients in terms of the business models. So there is going to be a significant
Pick
spending
one of these
discipline.
three. FY16 is, you're going to do very well in FY16. FY16 is going to be a very, very good year, or FY16 is going to be a spectacular year.
You can choose whichever one.
No, you've used all three. I'm asking you to close this interview with one commitment saying what is it going to be.
All three are fine.
Well, it can't be. Chandra, commit to one, any one description.
Don't try to use relative words. I'm not going to say that. All I would say is that we have a good growth momentum, and I'm going to stay with that.
All right then. Once bitten, twice shy, as they say. My final question to you, Chandra, has to do with your attrition controversy that you've faced over the last month or so. Not as much of a real controversy as just, I suppose, oddly handled. You're hiring more than you anticipated for the year, and that puts to rest any concerns that people may have of large-scale layoffs at TCS, right?
Absolutely. Absolutely. This is, completely a baseless rumor, but something for us to think about. Why this got so much of negative publicity, and we thought that Ajay did an interview and then addressed it, but somehow that didn't get picked up, and we can go on and on, and whether we should have, I should have given an interview. Some people said you should have come out and then given this interview 1 or 2 weeks back. People tell me 2, 3 different things, but at the end of the day, this is something for us to think about.
All right, all the best with the introspection. Thank you very much, and I hope we get some more detail and color on the next year when we meet you at the end of this quarter. Chandra, thank you for your time.
Thank you, Menaka.